Now on to South Africa. Transnet, the state-owned freight, transport and logistics companies, again struggling to run and maintain its operations properly. The company reported an enormous loss, $300 million in the last financial year, and it's set to post even more losses this year. More concerning is the impact this is all having on the South African economy. Here's CGTN's Sumitra Naidu with the details.
South Africa is a major coal and commodities exporter. The mining industry as a whole is an important contributor to the country's GDP. However, these contributions have fallen sharply, largely as a result of transport and logistic delays. According to a recent study by the Gain Group, these inefficiencies are costing the South African economy over $50 million a day. Transnet, which owns the country's rail networks, is at the centre of this problem.
Transnet is absolutely critical for this economy. The reason is it governs a huge amount of the business infrastructure of the country. It obviously determines what happens at the ports, it determines what happens at the railway system. And if those infrastructure is not working, then clearly the economy is going to have a difficulty. When we look at South Africa's imports and exports, they now represent almost 70% of South Africa's GDP. Which tells you that trade is absolutely critical to South Africa.
South African miners are struggling to get their commodities to the ports in time and are losing big contracts. Export coal prices have declined significantly from a high of $296 a tonne in June 2022 to just $98 per tonne in June this year.
If it wasn't for Transnet, this GDP of this country, the growth rate could have been about more than 6% last year. And this is what we need. This is what we need as an economy. So it is really a big problem. There's a lot of minerals we couldn't export. A large chunk of tax income was lost.
Transnet reported a $300 million loss for the year ending March 2023, reversing the $263 million profit it posted last year.
We are of the view that the management has failed their mandate that they were given. The entity is collapsing. You need to work hard. You need to ensure that it is rescued. But rather, it has collapsed to a point where they even sold 49% of the entity.
It's been a torrid time for Transnet, having to deal with natural disasters, strike action, theft and vandalism, power shortages, and of course corruption, all of which are having a disastrous impact on the economy.
If I look at the electricity system, people warned about the decay for many years, and it's only when it became an absolute crisis did we see the politicians and people getting involved to make an active decision. We need to get to that point within Transnet, but you don't want to wait for an outright crisis before you make those critical decisions.
The Gain Group's study suggested urgent action to avoid further impact on the economy. Sumitra Naidu, CGTN, Johannesburg, South Africa.